Welcome to RANsquawk CU morning briefing for Thursday, 7th of January 2010. Just taking a look at how things are faring at the moment. We've got a case of lower stocks. The FTSE CAC and DAX down between 0.5% and 1%, with that helping give fixed income in Europe a bit of lift. Bunds as well, just seeing a bit of upward momentum at the moment, having cleared now just around 8.5 billion euros worth out of 4 taps of OATs out of the French Treasury this morning. So quite a lot of supply and short setting this morning in Bund futures. In terms as well of economic data, we have seen the German retail sales report that has weighed as well on sentiment, as well as German retailers in particular coming in quite a bit worse than expected at the market open in the Eurozone. Elsewhere in FX news, it is worth noting of yen weakness across the board. Saw a sharp spike higher in dollar yen. That was after the newly appointed Japanese Finance Minister Naruto Kan, who has replaced Fuji, came out and said he is in favour of a weaker yen. Obviously that's in deep contrast to that of what Fuji has been saying of late. He also said that most companies in Japan would be more favourable towards a 95 rate. Dollar yen, of course, at the moment trading around 92.50. So we did see a sharp spike there in dollar yen to the upside. A couple of news flow pieces I'd like to point out to you. Did see some of the Chinese markets coming under a bit of pressure. That was after the Chinese central bank surprised the market by raising the auction yield of its 3-month bills for the first time since mid-August, and a significant step up in liquidity tightening sent offshore non-deliverable interest rate swaps sharply higher. PBOC also is set to drain around 137 billion yuan, that's 20 billion US dollars, from the market this week, the biggest weekly drain in around 11 weeks, in what some analysts have anticipated is in the first steps towards potential tightening of policy in China. Again, Chinese stocks were a little bit weaker on the back of that. In terms of global news flow, IMS Lepsky has said they may revise up their forecasts. And elsewhere, Fed's Bullard did give some strength to the US dollar this morning after he said US house prices are stabling and global growth is returning. Bullard also said the inflation for now is well contained in the US. Also ahead of the jobs data on Friday, the US monster employment index for December did come out at a rather disappointing 115 against the previous 119. Elsewhere in the UK, the pound has been under a bit of pressure. Continued uncertainty in regards to the current ruling UK Labour Party and their cabinet, having seen 2 former ministers trying to look to oust Gordon Brown, the Prime Minister. We've seen the Foreign Secretary David Miliband, who is seen as the successor possibly to Brown, coming out with a very disappointing backing of Brown, just saying that he supports the Labour Party and nothing mentioned on Brown himself. And again, that has weighed on the pound as it did yesterday. Today, with K-Boyd in session low down around 100 pips. Also as well for the UK markets, much of the focus now lies towards midday London, where we'll get the Bank of England interest rate decision, seen much as a sit-in-their-hands decision for the MPC today, where most are expecting them to leave rates at 0.5% and a QE unchanged at 200. Most analysts anticipating that the MPC will wait until February when they have the latest in the quarterly inflation reports, and that's when the current QE programme will also expire before they make any harsh decisions on policy. In terms of other things to look out for, we'll have the weekly jobless numbers at 1:30 at 7:30 in Chicago, and then we'll have the EI natural gas storage change. For US fixed income, we'll have a 3, 10 and 30-year note refunding, as well as a 10-year TIPS refunding announcement. That'll be at 4 o'clock London, and that's 10 in Chicago.